Welcome to Who Charted. I'm going to forever giggle when I say this title. We crowdsourced the name from Twitter, so you get what you get. I'm joined with Dan Russo. My name is Manish Khatta. We run the show at Potomac when it comes to the investments. We talk every day. We talk about charts. We talk about markets. So we thought, hey, why not put a show together that goes over some charts for all of our audience? And to make sure this is not a 30 to 45-minute show, the branding expert at Potomac decided to come up with 6 charts in 6 minutes. Now, that's going to be hard for some of us, but we're going to give it a go. Let's rock and roll. Yeah, first chart. Let's get going. All right, this is mine. 52-week new lows on the NYSE. I love this chart. If you look at these past declines here in the S&P in the bottom of this chart, you'll see that there's always a buildup of new lows. And I'm going to say this with a lot of definition here. Bear markets rarely, if ever, happen without a buildup in new lows. You have to have that mathematically for any decline to happen. Look at today's new lows. Yesterday was 28. There's nothing there. And so, the bear case just can't be made without a buildup in new lows. And I love this chart for that reason. It sets the stage to put you in the right zone when it comes to managing money. What do you got on your list, Dan?
Moving on to the next chart, the Bloomberg Commodity Index. I think this one's interesting. It's been getting a lot of play lately. A lot of people starting to talk about commodities, the rallying commodities that we've seen since the first half of last year. I always like to zoom out, check out what's going on, bigger picture. This is a weekly chart of the Bloomberg Commodity Index. And by the way it looks, we haven't even broken out yet. Still fighting to try to get back above the highs that were seen in 2018. So hard to make the case, in my opinion, that a bull market in commodities is getting long in the tooth when we haven't even broken out above those 2018 highs yet. And I think that if we do, you get to start thinking about commodities as an asset class, actually potentially outperforming equities at some point, because there's a lot of blue sky at the top of that chart if we get above those 2018 highs. So people starting to wake up to the rallying commodities, but realistically, we haven't even scratched the surface yet, and the potential if we get a breakout above those 2018 highs.
And if you're buying index funds, you really have no exposure, if any at all, to commodities. So exactly. Keep that in mind. Spot lumber, spot gold in the blue, and the S&P in the red. Think about this. Gold, defensive asset. Economic growth, you would think lumber prices would increase. Now, on a relative basis, if you look at this, you can make the argument that when the ratio of lumber to gold is declining, economic activity is declining, and therefore maybe the market would follow suit. And we've tested this back and forth and are starting to use this in a lot of our systems. As you can see, in 2018 to the bottom in 2020, lumber gold was telling us the story. It was telling us that economic activity was weakening. It was telling us that there was issues underneath the surface of the market, while the S&P was continuing to increase, being led by just a handful of technology stocks. Now let's flip. Since the bottom, they have both increased in tandem, with lumber gold just screaming, right? And most of that is just based on lumber and gold being doing extremely poor. So what's next?
Copper gold. It's always nice to get some sort of confirming data point, right? So you can look at lumber gold, it's moving to the upside. Copper gold, same mentality here. Copper, industrial metal, gold, precious metal. When copper's outperforming gold, as it has been since the back half of last year, it's a sign that investors think economic prospects globally are improving. But again, you look at that lumber gold chart, it's gone parabolic, but it's a shorter term chart, right? You're looking back over the past couple of years. Zoom out again and notice that we haven't even broken out yet. So if you do get a breakout in this copper to gold ratio above the levels that are highlighted in red on the chart, there's potential for a lot more upside there, i.e. a lot better economic activity. And it's a confirming data point to the lumber gold chart, right? You never want to kind of hang your hat on one data point. If you get a confirmation point somewhere else, it's always better. And this move more recently has some momentum behind it, so I think it's interesting.
Checks and balances, another chart right here that confirms checks and balances. When you think about Dow theory and the transports being a leading indicator, didn't do anything for 3 years while the S&P ripped higher. Same story as lumber gold. It hung with it, but it didn't necessarily outperform. And since then, it's been leading higher and crushing the market. It's been up 13 straight weeks, I think. And if you're in the camp of Dow theory and this being a leading indicator, what else do you need to see here? Is it above its moving average? You look at the 25-week simple moving average that we track. It's way above it, and you can make the argument it's extended, but whatever. Who cares? We buy high and sell higher. The story right now is still in the corner of transports, and that's still confirming the market high. So it tells a story right there in terms of, like you said, having the checks and balances in place. What's next?
Well, not only does the Dow Transports confirm the market high, but it confirms the leadership within the market, right? A lot of the leadership since November has been in the quote unquote reopening stocks, right? As opposed to 2018 to 2020, where the leadership was predominantly in tech and growth stocks. And that change in leadership, you're actually seeing a confirmation of it here with semiconductors on a relative basis in the top of the chart. After making a negative divergence back in February, i.e. the ratio made a new high, but momentum at the bottom of the chart didn't confirm. The relative relationship between semis and the S&P rolls over, takes out the 50-day moving average. 50-day moving average starts to roll over, and now the ratio closes below the 200-day moving average. All as momentum is shifting lower. So not only are you seeing confirmation of the uptrend in the market, but you're also seeing confirmation, in my opinion, of leadership on the part of the reopening type names, the reflationary type areas of the market, and away from the past leaders that were kind of growth predominantly within the tech space. So I think this is an interesting chart to keep an eye on for signs of leadership changes under the surface of the market.
Got it.
Those are my three.
This is not financial advice. Don't you dare try to trade or do anything based on what we're saying. We're just here to provide our thoughts. PotomacFund.com if you want to learn more about us. Subscribe to the YouTube. We're all over social. Check us out. Give us some feedback. Do you like it? Do you hate it? Do you want to see us ramble on for 45 minutes, or is 6 minutes enough? Dan, I know you were sweating a little bit trying to get all your shit out in 6 minutes, but great job.
Thank you. You as well.
Thank you. Let's go.